What's going on, everybody? This is Economic News Insights, and today I want to talk about the stock market, in particular AI, and how I think at some point in time it's a bubble. I mean, this is kind of obvious. The AI bubble is now bigger than the dot-com bubble, and I'm going to tell you why I think this is a bubble, or why I know this is a bubble, and then what I think is coming. There's a couple factors to take into consideration. Do I think the bubble is going to pop in the short term? No. But I am preparing myself, and I'm also sharing my insights with you guys moving forward about what to expect and when to take profits or consider taking profits. Thank you to everyone who smashes up the likes. This is not professional financial advice. This is one opinion from one dude on the internet. Thank you to everyone for watching. So, what is a bubble? A bubble is, in economic terms, it is basically when the market starts to grow to a point where people start to think it's always going to go up. It's never going to really stop. People get greedy. They start to get overconfident. And that's kind of where we are at right now. People are like, yeah, I'm buying NVIDIA. It keeps going up. And, they're so excited. They want to buy more Tesla. They want to buy more blah, blah, blah. Right now, Microsoft is up. All the AI stocks are up, Palantir. But let's talk about the stages of a bubble. So first you have displacement. This occurs when investors get enamored with a new paradigm. We are in a new paradigm right now, folks. AI is a whole new industry, a whole new thing, right? So it's a new paradigm. Next up, number two, is the boom, which is what we've been seeing. The boom, where things just keep booming. NVIDIA comes out of nowhere. They've been around for a long time, but all of a sudden they start rising. Microsoft overtakes Apple. It overtakes Google. And it just keeps going up based on the AI. And then you have what happens after that is where I think we're at now, which is the euphoria. Now, how long is the euphoria going to take? I don't know. But we're in this greater fool theory where it just keeps going up. People, young kids or people who just got funny money, they just simply, all they have to do is just put money in the market. It doesn't matter what old man Buffett's saying, and they just make money. Now, here's some factors that I want to talk about before I get into step 4 and step 5. Number one, you have Warren Buffett sitting on large mountains of cash, like hundreds of billions of dollars. I think it's like $300 to $500 billion. So why is Warren Buffett sitting on so much cash? Why is he not in the market? That's one big red flag. I'm going to give you some green flags as to why you should stay in the market, but that's a big red flag. Like, why is old man Buffett, the greatest investor of the last, decade, or last century, why is he out of the market? Why is he sitting on mountains of cash? Why has he been sitting on cash since basically December of 2024? And so this goes along with step number 4, which is profit taking. So once you start to see not just Buffett, but other companies like BlackRock or Vanguard or some of these other bigger companies start taking money out of the market, they call it smart money. So when you see profit taking from them, you have to remember, these are the ones who are the market makers. They're the ones who control. At some point in time, the market makers, the smart money, are going to decide that it's reached the top and they start taking profits. Now, one thing I want you to consider about smart money, once they start taking profits, they're no longer interested in the market going up. They have now a vested interest in the market going down because their long-term strategy is what? Sell high, buy low. So they want to sell at a high price. They want all the plebs, all the weak hands to get flushed out of the market. And then they come in and then they buy at the bottom of the market. They buy low. Now, we've seen these flash crashes. It seems like Trump's administration always likes to do flash crashes. Some call it V-shaped recovery, where it goes down really quick and then it shoots back up. Or some have even called it an I. It just goes down and up. It doesn't even really do anything. It's not like a prolonged period. So we haven't had like a prolonged period. So we could see flash crashes. That could be the way of the future, where we just see flash crashes and all you have to do is just hold, no matter what, even if it's a short period of time or a couple months or a couple, who knows, maybe a year or something. We don't know. But in years past, you had long sustainable bear markets that lasted from 2008 all the way until 2012. Obviously, it was like a recovery, but it still hadn't reached previous all-time highs where it was in 2007. So what we're looking for after this stage of euphoria is profit taking. The one that we have right now is Warren Buffett. Now, I want to say something that's really important, and it's probably the number one factor for why I haven't sold out of the market and why I'm still in the market, although I'm anticipating top signals And at some point in time, I'm going to have to say I'm happy with the gains and I'm just going to take profits out of the market. Donald Trump's ego. Okay. So Trump's ego requires him to actually go down in history as a man who managed a very strong economy. So I believe he will do whatever he has to do within his 4-year term. Remember, we're not even full 1 year into his term. That will start in January of 2026. So we're basically halfway through Trump's first year of a 4-year presidency. So I would say that as long as he's president and no unforeseen disasters happen, the worst that we could see are flash crashes, because ultimately he wants to go down as the guy who had the best economy in the U.S. future. So he's going to do everything from, economic stimulus to whatever tools are at his hand, lowering interest rates. Obviously, he's pushing for that. But when profit taking happens, even if Trump is president, start paying attention, because who's taking the money out of the market? Again, we're talking about Vanguard, BlackRock, Warren Buffett. This is the smart money. And when that happens, you're going to see panic. Panic will set in, because what happens, like I said, when the smart money starts moving out of the market, panic sets into the market, and it's a cascading effect downward. You're either going to be faced with one of two options. You're going to try and sell and try and, stop loss. You're going to try and stop your losses, or you're going to hold and you're just going to say, I'm in this no matter what for the next 20 years because the U.S. economy keeps going up on a long-term cycle. But as far as AI goes, and that's the main one here, I'm going to highlight this now. I think AI is absolutely in a bubble. And the reason I think that AI is in a bubble, I don't think they're going to deliver on everything. I've seen this with many tech sectors in the past where they talk about this big game, all this displacement, all of these layoffs happening, all of this technology coming. These are things that aren't even here. These are things that they're saying is coming, advanced AI or like AI with consciousness. Like, I'm sorry, but I still use the Verizon apps with the automated, chat bots. And I'm like, get me away from that thing. That thing is still not where it needs to be. And I love using AI. Everyone thinks AI is ChatGPT or Gemini. That's one form of AI. That's just an AI chat bot. That's an AI aggregator of information that's on the line. Is basically functioning as a little bit smarter than a Google search. Okay, so that's basically what you're dealing with, is like a more advanced search. Okay, and so it's not really anything new that we haven't already seen. It's just basically a really fast algorithm that uses really fast computation and chips. I mean, that's basically what it is. It can create images, it can create videos. It's pretty smart, but don't get me wrong, I'm cool with it. But as far as like advanced AI, I don't think they're going to be able to deliver on all the things they say that are coming. So I would say it's going to be a bubble. There's a lot of people who think that AI is going to take all these jobs, and they will take some jobs. There will be some autonomous driving. I think that's something that's coming soon. We've seen that with robo taxis. I mean, if these robo taxis can actually drive on freeways, that's going to be a game changer. But right now, if you drive around in Phoenix in a robo taxi and say Waymo, it can't even drive around in the freeways. So, I mean, it's still not there. We don't know how close it is to getting there. But Tesla, another one of those things, they say everyone's going to have like a homemade robot. We'll see if that ends up happening. But I think that AI in general is a bubble, and I think that it's going to be due for a correction. I'm not saying that it's going to go away. I'm just saying it's going to correct itself, and it's going to have to flush out a lot of the riffraff, consolidate, and then come back again at a later point, kind of like what we saw with the .com. So I'm not saying that it's not going to happen. AI is going to happen. I just don't think it's going to happen as fast as everyone thinks it is. And I think in that period between now and when it gets to a point where it's more developed, there's going to be a crash. It's going to flush out a lot of the weak stocks. It's going to flush out a lot the weak technologies. It's going to consolidate. It's going to go back into the lab a bit, and then it's going to come back out again. And you're going to have some winners, some companies that stayed around for a long time. And when I think AI collapses, or when I think it corrects itself, what I think is going to end up happening is a lot of the market is going to go down with it. Some of the stocks are going to stay strong. I don't think you're going to see much volatility in some of the legacy stocks like Ford, GM, Chevron, ExxonMobil, some of the defense stocks. I think those are still going to be pretty strong. But I think in tech, you're going to see a correction coming in the AI sector, in the stock market, because right now what we're seeing is way too much euphoria. We're seeing way too much just funny money being thrown around, valuations that are way above trillions. I mean, Meta being valued at $4 trillion, and all they do is just serve ads on Facebook and Instagram. I'm sorry, but like, what's your business model that justifies $4 trillion? Like, how are you making that kind of money? I mean, it just doesn't make sense. So I would say that's another thing. And Tesla's not even really profitable. How are they a $1 trillion company being not as profitable as it is right now? So we'll see what ends up happening. Let me know in the comments what you guys think. Thanks to everyone who likes the videos, and we'll see you on the next one.